Welcome, welcome. Retire into the stock market with Godric, November 25th, Monday, 2024. How are you? I'm going to talk about some stock market stocks tonight and trading. What do I have behind me? It's Tesla. Oh, look, down 14 to 338. See, I wanted to show you Tesla because this a stock like this will separate the men from the boys. Most people go into stocks thinking they're going to make a lot of money, but it's not always going to be easy. And the proper traders, investors have to weather the storm and deal with a stock like Tesla. It's going to be down 14 points on any kind of day. And then down another point in after hours. Take a look. But it has a PE, 92, has volume, 93 million. Market cap, 1 trillion. Those are the numbers you're looking for. Welcome, welcome. MW, welcome, user, 813. Jasso, Eric Higgins. Ian, Captain Brad of Hard. Welcome, Jesus. Jesus is here. Appreciate you. Monday night, stock market with Godric. Tesla's in the background to show you that sometimes some of the best stocks are going to be down. We have to tolerate that. We have to have a trade for that. Get your calculators out tonight. We're going to do some math tonight. We go for about an hour on Monday nights. I also like to come back probably like Friday or Thursday night, one other night of the week. I want to give you guys a break in between so you can study, so you can write in your journals. Got your pencil? I will be taking some questions tonight. Have a few trade ideas for you, a few stocks to look at, and we'll probably wrap up probably by 11:15. Thank you for joining. Appreciate you. If you guys can help me get these likes up, knock these likes out to the moon like a video game. Pat, 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 pat. Let's see if I have this here. I went on TikTok and they talked about like what people are looking for. And let's see. I think I take a picture of it. I'm going to show you. Here it is. What's the best trading app? These are searches that we have on TikTok. How to become a millionaire. How to invest your money. How do stocks work? That's a good one. Best digital art app. Okay, so best trading app. I like Thinkorswim, and that's going to be through a Charles Schwab trader, Charles Schwab broker. It just works for me. It has the best. Some of my pictures on the option chain, for example, are from the Schwab app. It's now Thinkorswim. So if you don't know where to go, I would go with Schwab. That's just my best advice. And then the Thinkorswim app has all the bells and whistles you need. I don't prefer Robinhood because they don't have the brokers to help you 24/7, for example. You might have problems on the weekend. Okay. So best trading app, how to become a millionaire. How to become a millionaire is not so. It's not like a get fast, quick scheme. It's more like a get rich slow. Because if you can invest money over time, with effort and with a little bit of knowledge of investing, like put your money in stocks, for example, over time you'd become a millionaire, and that's slow. And you want it to be slow because if you do something fast, if something happens really fast for you, it can also go fast. It can be gone fast. If you can get rich slow, like in the market, then you're going to keep it forever because you earned it, because you worked for it. It took time, took patience. So you want to get rich slow for you new people. You don't want to get rich fast. There are some trades that are risky that could get you money, but I'm not going to show you those because those have a high risk, high chance of getting you to zero and blowing your whole account. You people know who've done it already. You people know already how that works. For you new people asking about stocks, we're gonna get rich slow. Okay. All right. How to invest your money? Basically, you open a stock market account. It's like a bank account, and request a margin account, and just start buying some stocks, putting some money there. If you have a job. Every week you get paid, every 2 weeks, whatever it is, throw some money there, $100, $50, whatever you can afford. Because you're building your account over time. Consistent deposits. And then you're going to grab some stocks when you have the money. And then you're going to start buying stocks. You're going to learn the ropes. You will pick some lemons when you're new. That's just how it works. When you're new, you're not going to know how to pick the best stocks. But you learn from mistakes. These lemons will go down, you lose money, then you learn how to pick better stocks. So in a way, you have to learn how to lose money to learn how to make money, if that makes any sense. Because you're not going to know anything unless you have these experiences, these life experiences where you lose, then you learn not to lose. Makes sense? Now Tesla is one of these, I think, great stocks, but it will be down on occasion 13 points or even more, 20 points. And that keeps some of the people out of the market because not everybody can tolerate that. Like your money's going down, people get that bad feeling. So back to Tesla. Thank you guys for the likes. Appreciate you. Thank you. I appreciate that. Also, during the live, I want you guys to give me 2 shares. Give me 2 shares each. On the bottom right corner, share with 2 people. Get some more people in here. This is a Tesla cover call. This is what the option chain looks like. Any stock you buy, ideally has an option chain. An option chain, there's like 1,000 options for each stock because they're on weeklies, they're on monthlies. They go leaps out, like 1 year, 2 years out. And then every in the middle, you have a strike. So you have all these strikes. So these are all different options. I'm circling the ones that are important to you. Just above the strike price. In this case, the 350 strike and the 355 strike. Because why? Because they're paying you $16 and $14 per share, which equals $1,600 and $1,400 for writing the covered call, because that indicates a contract, which is 100 shares. And if you look at your purchase price, 338, that's 33,800. Let's do the math. You buy the shares here for 33,800, 338, and change. Come tomorrow. Write the cover call for the 350 strike. It's 1610. Let's do the math. 1610 divided by your purchase price of 338, 59. So you're getting paid that much to agree to sell it for 350. See how that works? That's a cover call. Equals 4.79% return. Tesla, 4.79% return. And that is only about 3.5 weeks. It's not even a full month. That's December 20th. That puts you on a trade from now to December 20th. 4.79%. 3.5 weeks. 3 weeks. If you went 4 weeks, you get to pay a little more. I could look that up for you. Tesla. You do click on options, go to all. And this is a good one because Tesla is very robust. A lot of volume, a lot of investors trading. Go to December 27th, which is technically closer to a month. The 350 is going to pay you $18. 18 by 18.55. So $18 is even better. But it's one more week, so it takes more time. What's better? So let's do the math. $18, which is $1,800 per contract for a covered call. Divided by your share price of $338.59, your purchase price equals 5.3% return for a full month. 5.316. Going to do the decimals. And that means, to me, in my mind, that means 53% return for the year on Tesla covered call. So as long as you can stay with that stock, and it will go up and down, you're going to get a 53% return on the premiums for the Tesla covered call. And that's going to put you in a profit zone above the market, probably above Tesla stock itself. Probably beat the S&P 500. And what? You do it right, you can pay all your bills, retire into the stock market. Lesson 1, write it down in your journal. Okay. What method do you use with a 2K account? Fire Spittin' Kitten. What method do you use for a 2K account? Thank you for the question. If you want to do a little bit more risk, what I would do, I would just buy a few dividend stocks, Pepsi, Philip Morris, McDonald's. Matter of fact, today, notice that the market was up. What's the market up? The market was up. The Dow Jones. It's up like 400 points. 440 points to 44,736, which actually hit a new high today, all-time high, bull market, okay? But look, Tesla was down, and also NVIDIA was down, so some of the techs were down today, even though the Dow Jones was up. So that's like an incongruence. What's happening? The techs get hammered, the Dow Jones stocks go up. Why? Because look, what am I going to show you? Let me see. I'll take some pictures for you. Tesla and NVIDIA were down. Here is Tesla, down 14. Here's NVIDIA, down, let's say 6, okay? Which are huge tech stocks, right? But look at this. Oh, look at Pepsi. 163, up $1. No issues. It has a 3.3% yield. You see the yield at the bottom? That's the dividend. Write that down. Look at Philip Morris. Oh, up 72 cents. Yield 4%. Look at McDonald's. Oh, up 6 almost. Yield is there 2 something. I cut it off. Sorry about that. I think it's 240. But see how dividend stocks kind of like go with the Dow Jones, with the market, and aren't really affected by tech dumps. So I would grab some dividend stocks and hold those and build your account, because that's going to be an easy win over time. You're going to get a dividend every quarter. You're going to get share growth in some of these better stocks. And then with another portion of your account, I would start to do covered calls. And with 2,000 is tough because you're right at the border of doing margin. So you want to actually be above 2,000 to do margin. But Rocket Labs is going up. RKLB. Rocket Labs is $23. So that only takes 2,300, sir. So buy 100 shares of Rocket Lab for 2,300, and let's do the cover call. Rocket Labs, RKLB, 2376. Once you have the dividends in your account, once you have some foundation, okay, you're not just only going to do Rocket Labs. Because Rocket Labs is pretty risky. They'll probably at some point come back down. And we're going to buy the shares here 100 for 2,300. Then we'll do the cover call. Click on options. Click on all. Let's just keep you on December 20th because that's the monthly. It's about the 20th of every month. Agree to sell. So if you buy here for 23.76, you do the cover call for next month, December. In November, write December. In December, write January. And what I would do is write the 25. Sell minus 125 CC strike, which is December 20th. RKLB. And what is it paying? Look, 220 by 235, which is 220 is the bid. So you're going to get 220 per share, which is $220. Okay? Let's do the math. Okay? Do this with me. 2.2 premium on the option chain divided by 23, your purchase price at 23.76 equals 9.259% return for 3 weeks. What kind of an investment would get you a 9% return in 3 weeks? That's how much interest they charge in a whole year on some of your credit cards. 9.25. And what that means to me, it means you're going to get 92% per year because I can manage to do 10 cover calls or more in a year. It's probably 100% if you go every 3 weeks. But just stay on the monthly. So, again, you're buying the shares. You're agreeing to sell them at a higher price in my strategy. In this case, you're buying them for $23.76. You're agreeing to sell them for $25. The premium shows $220, which all you have to do is put -1 sell in your app. -1 cover call strike 25 December. And you'll have your $220. $220 income for a $2,300 investment. It's like almost 10%. It's tough to beat that. So while Rocket Labs pays you $220, Tesla's paying you $1,800 or $1,600. Less percent, 5%, but consider that Tesla is a bigger, more broad stock that has, in theory, it's safer because Rocket Labs is not going to show a PE. They're new, hot to trot on the block, and Tesla's an old school, top of the line EV company. Rocket Labs is more of a new, like a new baby. It's just making its way. A lot of competition, different companies they're going to compete with, and Tesla really doesn't have a lot of competition. So it's the main game. So you're exchanging high return for safety. So you show me $2,300, I'll show you $220 a month on Rocket Labs. You show me $33,000, I'll show you $1,600 or $1,800 return on Tesla a month. Those are cover call trades. Write them down. Okay, questions? Appreciate you guys. Thank you for the likes. I appreciate that. I come on every Monday night about 10 o'clock. I'm going to try to do an earlier time, but I don't want to compete with prime time. I know a lot of things are happening around 7 o'clock. This is the time I think people are chill just right before they go to bed, so it stays in your mind. Questions. I have Apple put for this week. Rudy. It sounds like you're buying a put, so you need the stock to go down. Is that right? Or are you selling a put? I have more respect for selling a put because what? Selling a put is very similar to the covered call. You're getting money up front. If you sold, I'm not going to show Apple because I have Tesla up right now. But let me pull up Tesla. If you sold the put for Tesla, it's very similar to selling the covered call. Let me tell you how that works. You don't buy the shares. Okay, so no shares, okay? What you do, you go out next month, December 20th, and you write or you sell, which is the same thing, sell the put. And you do that and at a lower price, so you have a buffer, okay? So if it's 330, it went down more than after hours. It was 338, which it was at the end of the day today. Look at the 330, pays 1,500. The 327 pays 1,400. I would sell the 327, which is just over 10 points lower than the strike price. So Tesla 338.59. If the stock breaks below 337.50, I'm sorry, 327.50. Write this down. Sell one put 337.50. Sorry, 327.50. So it's fully 10 points below the share price, just over 10 points. And you're going to get paid for that $13.95. Let's just say $1,400, because you can put a limit order. Limit $1,400. So instead of buying 100 shares of Tesla for $33K and make it either $600, $1,600, or $1,800 a month on a cover call, you can not have any shares, sell a naked put. What that means is you're agreeing to buy Tesla should it break below 327. So you have a buffer there. It's 338. 327 is like 11 points down. Okay. And if it breaks below that and stays there by expiration by December 20th, you're going to keep a hold of $1,400. So it's like going into a grocery store and saying, hey, manager, if that wine goes on sale, I'm going to buy that wine when it goes on sale. And how much would you pay me for that? Sounds crazy, right? An option buyer will pay you to take those shares should they go down, because they're buying the option hoping it will go down. Let's do the math. This time, the investment's less because you're not going to have to buy it unless it goes down to 327. So 14 premium on the put side divided by 327.50 equals 4.2% return. 4.227% return. Appreciate you guys. Okay, 4.27% return. And if you did 10 naked puts a year, you're going to get 42.7% return a year if you did 10. A little different. You don't get share growth on the put side, and you're dealing with a little bit less capital, so but you still have a nice return. So similar trade, but not the same. Okay, so I can't tell you about Apple. I mean, Apple. I think Apple's probably going up. Is it not? Let me look at Apple. Apple. Let's look at the equity. Yeah, Apple's going up on the 6th month. It's going higher. It's really steady. It's like it's really steady like magic. It's just kind of like down up, down up. So I think it'll go higher. If you're on the puts, I don't know what to say. I would sell the puts. Okay, questions. What the fuck is this? People getting boring. What dude say? Sky, we're selling puts and we're buying Tesla shares and writing cover calls monthly to get a monthly return to pay all your bills and retire in the stock market. That's what we're doing. Get your money, put it in your stock market account. You can follow me on these trades. What about Gevo? Gevo, G-E-V-O? I'll look at your stock, Gevo. G-E-V-O. Gevo Incorporated. $1.72. I'm going to just say right now, it's a penny stock, don't do it. Penny stocks generally are broke, and they're bad investments. So let's pass. Let's get a robust share price, $100 a share, $200 a share, ideally. Like Apple, like Tesla, $300 a share. Rather you have one share of Tesla than 300 shares of your dog shit penny stock that's going nowhere. Let's keep it real. Questions. For some reason, I'm not getting all the questions on my live, but then after the live, I see some more questions. So you guys who've been on a lot of my lives, I do respond to questions, so just put them in there. And you're always welcome to DM me. And I always get with my subs first. You subs know I take care of you. It's only $5 a month. You subs already know. But I apologize if I missed your question. I'll see it after the live if I miss it. Questions. Apple. I think Apple's a great stock. Tesla's a great stock. NVIDIA prediction for tomorrow. NVIDIA prediction for tomorrow. Ken. Let me look at NVIDIA. Well, today it went down 5, right? You weren't expecting it to go down 5 when the stock market hit an all-time high in the Dow Jones, were you? It went down 6 today. NVIDIA will probably... It'll probably go up a little bit in the morning, a point or two, then it'll go down, 3 or 4 points. Then it'll probably go back up and close like $1 higher tomorrow. So it's going to go on a roller coaster ride tomorrow. Is NVIDIA having earnings? It already had earnings, actually. It had earnings last week. So it kind of, see, here's something you can write down in your journals. When the stock has earnings, especially a hot stock like NVIDIA or Tesla, etc., Apple, it tends to creep up before the earnings. And after the earnings, it's going to cool down. That's just how it works. We're all still here. Nothing magical happens. The hype is gone. The investors who bought the shares were trying to get a big return. They didn't get the return. They sell. They move on. So since the earnings just happened, probably going to cool off. But it will maintain price. It won't go down a lot. Because why? Because they just added it to the Dow Jones, which means you have to buy those shares. Those investors those mutual fund managers who are covering the Dow Jones have to buy NVIDIA. And it's also a great AI stock, a great computer chip stock. And it's the biggest stock right now on the block, so it has a lot of attention. So I think it'll keep going higher. I think it's a safe play. It won't go down too much. But when it does dip like this, I say buy an opportunity. And what you can do a cover call on NVIDIA. Let's look at that. You buy the shares here at 130. It's 135 after hours, but I'm going to say 136 because that was the price at the end of the day. 136.02. Okay? So 100 shares is going to cost $13,600. Okay? If you don't have $13,600 at your age, I want you to think about your financial intelligence. I'm showing you some trades to improve your financial intelligence and some stocks. All right, cover call, hit on options, click all. We're gonna go out till, we'll just do 3 weeks till December 20th. Buy the shares here at 136, and we're gonna write the 140 strike. So we agree to sell the shares at 140, okay? Or 141. It's almost the same. You're gonna get, for 140 you're gonna get $4.40, and for the 141 you're gonna get $4.05. So 13K investment gets $440 a month, or every 3 weeks in NVIDIA, or 440. Right in either the 140 or the 141 cover in NVIDIA, or 440. Right in either the 140 or the 141 cover call, which is 4 points higher or 5 points higher, which is to say that you can get $400 more share growth for the 40 strike, $500 more share growth for the 141 strike. So those are both good candidates. And let's do the math. 440 divided by 136.02 share price equals 3.23% return. 3.23% return. for 3 weeks. And that's 32% return for the year, which is great. And what? We allow for some share growth. So it could be more. Not saying you're only going to get that. It could be less if the stock dips more, but it could be more if the stock goes up. So you look at both sides. And the put, let's do the put for NVIDIA. You have no shares. The stock dips, so it's a good time to write the put, because when the stock dips, the put pays more, right? So the shares are 136, so I would look at the 132. That pays 385 by 390. That's perfect. So by next month, December 20th, probably 3 weeks, 3.5 weeks, if NVIDIA breaks down below 132, you're gonna buy it at 132. And for that, you're gonna pay 385, 132 naked put. So one strike 132 NVIDIA, NVDA. You're gonna get 385 by 390. That's $385 per contract. And let's do the math. 3.85 divided by, now here we're going to use 132 because we buy the shares at 132, which is a discount to what it is today. 385 divided by 132 equals 2.9%, just a little bit less than the cover call, 2.916%, which is still great. And we don't have to worry about having shares. We just write the cover call every write the naked put every month on that, in that way. And if the shares stay the same price or go up, nothing happens. That option we sold expires worthless, which is good for us because we sold it. And we do it every month. Repeat, 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 repeat. Whether you're doing a cover call or a naked put, repeat, repeat every month. Okay, so more questions. Where is Pep Coin going? I don't do crypto. Karma, sorry, I don't do crypto, but I do like Bitcoin. I think you can get a hold of some Bitcoin. You can buy Bitcoin on the Venmo app. They do charge either $1 or $2 or $3 for like a commission. You don't mind that. You can buy some Bitcoin on your Venmo app. I don't know, just thought I'd share with you. And if, let's say, it goes to 110K, that's a 10% gain. So let's say you put 1,000, that's 1,100 you'll get back. Could happen this year. I lost on AMC and missed the run by not being diligent. Auntie, question, I lost on AMC and missed the run by not being diligent. AMC was like a meme stock. I know they were having trouble, but like Roaring Kitty fans were on AMC, and especially what was that, GameStop. So they were having problems, but we were showing them by buying those shares. Ooh, AMC's down at 482. I can't do it. Penny stock. Look, guys, as much as you want to hold on to this company, AMC's a movie theater, okay, primarily. Movie theaters are going out of business because of Netflix. Netflix is streaming these things right to your home. They had the Tyson fight. They have all these great shows. And Hulu and Disney right to your living room. So why would you want to go to the theater? Well, there is a reason to go to the theater. If you're on a date and want to get popcorn, go to the theater, okay? Because the ambiance. But other than that, you can just get it in your living room. So out with the old, in with the new. So this is eventually going to go bankrupt. And while you can get a return on AMC, you can go from 4 to 5 to 6. Eventually, it's going to go to 0. And the theaters are going to go out of business. Unfortunately, because of stocks like Netflix and Hulu. Sorry to say. GameStop may survive longer because GameStop is doing like online content. But same idea with GameStop. Eventually. Amazon is bringing all the stuff you need to your front door. So why would you need to go to GameStop? It doesn't make sense. But I know it had like a lot of value. It has some value, so value investors. Go for it. What method do you use with the 2K count? I answered that. If I miss your question, guys, just put it in again. ASML. ASMI, is that a stock? ASMI, sounds familiar. ASM International. Whoa. Look at this, 536 per share. ASM International Semiconductor. Huh. ASM International NV, together with its subsidiaries, engages in the research, development, and manufacture, marketing, and servicing of equipment and materials used to produce semiconductor devices in Europe, in the United States, and Asia. The company's products include water processing disposition systems for atomic layer disposition, ALD, silicon carbide, plasma-enhanced chemical vapor disposition. Wow, this is high-tech stuff. Let's look at the, okay, I look at the volume. First of all, it has worked by share price, one check. ASMI, 536 per share, check. Robust share price. 2, does it have the volume? This can't be right. 3.6K, let me see. Volume is, yikes. Doesn't have the volume. Is this a new company? 5-year. Yeah, oh no, not a new company. It has a 5-year. On the 5-year chart, it's doing well. So it has a 5-year chart, check. Does not have volume, so no check on the volume. I don't like that part, and which means it doesn't, oh, there's no option chain. There's no option chain. So it has no cover call. Check, X, rather. I don't think it has a dividend. Let's see. Oh, it does have a 0.5% dividend. Gotta give it the check mark, dividend. Try that, 3 check marks. No cover call, no volume, but it has robust share price. It has a 5-year chart, and it has a dividend. I'm pretty sure it doesn't have stock splits. Let's take a look. Stocksplithistory.com. Guys, stocksplithistory.com tells you your stock is at stock splits. ASMI. It has sort of a good chart. Ooh, 1 stock split. Huh. Wait, is it a 3-for-1 in 1996? So it's been hanging around for a long time. Let me go back to the 5-year chart. 5 years ago, it was 114, and now it's 536. So it went up 5-fold in 5 years. Pretty good. Out of 6, what criteria? It has 4. I'm gonna give it a pass. I'm gonna say it's good for long-term share growth. No cover call, small dividend. I would say it's okay for long-term share growth. Next, questions. I can only go back so far, guys. If I miss your question, I'm telling you, buy low, sell high. Biz Leave Shizzle, welcome. He says, I'm telling you, buy low, sell high. Yeah, I like it. Let's do it. Thank you guys for coming tonight. We're about halfway through or farther. Show you a few more pictures, look at a few more trades. I want to wrap it up. I'll take some more questions. You guys, if you gift, I'll take some stars and flowers and a crane or 2. Drop a crane on me, I won't say no. Thank you. If you want to sub, it's only $5 a month. I get all my subs, take care of all my subs first. What platform is this? Well, this is just, the background is just the iPhone app. iPhone app has a stock app that comes with it. And I was showing you some pictures of what dividend stocks that are, look at, McDonald's had E. coli like last month, and nobody cares. It's up 6 points. Like, that's like old news. This is a stock app that comes with your Apple iPhone. It's really easy and cool. This here is, this is CAVA. CAVA's going up too, by the way. Different kind of stock. Pull up CAVA. This is the Thinkorswim app, which is awesome. I was looking at CAVA stock earlier. 142, so it has a robust share price. Okay. Click on equity. 5-year chart. It does not have a 5-year chart. It's a new company. It started in 2023. But it's going up nicely. Has volume 3.1 million. Robust share price. Check. Right down CAVA. It's like the new Chipotle, but Mediterranean. And that CAVA Group owns and operates a chain of restaurants under the CAVA brand in the United States. The company also offers dips, spreads, and dressings through grocery stores. In addition, the company provides online mobile ordering platforms. CAVA Group was founded in 2006, headquarters in Washington, D.C. And it went public, it looks like, in 2023, 2 years ago. And the stock went from $40 to $140. So like 3 times, more than 3 times in 2 years. So 1, robust share price, check. 2, 5-year chart. Doesn't have a 5-year chart, so X. It only has a 2-year chart. 3, does it have the volume? Check. Yes, 3 million a day. 4, does it have a cover call? I know it doesn't have a dividend. No dividend. And the 6 was stock splits. No stock splits. Pretty sure. Let me just check. CAVA. No stock splits. Let me go back to ASMI for a second. I forgot one important criteria. PE. Does it have PE? Which is showing profit. CAVA has a PE of 318. Wow. 318 PE. PE 318. Very high. But hey, I give it a check mark. 1, 2, 3. 1, 2, 3. I only have 3 check marks on CAVA. Oh, I gotta do the cover call. Let's do the cover call. It has an option chain. Let's take a look. Buy the shares here at 142, and they are going up. It's a nice trend upward. It's worth looking at. Probably the 150. Just guessing. It's going to be the one we're going to sell. December. 150 is 390, 147, 142. The 147 is paying $5 by 540. So you buy the shares here at 142. 14,000. 142.54. And then you're going to really sell the cover call at 147 for next month, December 20th. Get $5. And let's do the math. Let me see, is it $5 exactly? Yeah, $5. Okay. So 5 divided by 142, 54 equals 3.5% return. And that's pretty good for a food company. I like Chipotle CMG a lot, but it doesn't even pay barely 3% on the cover call. So this is pretty nice to have CAVA pay 3.5% on the cover call. And I'm going to give it the okay, because it has robust share price, it has volume, it has cover call, and it has a 5-year chart. That's 4 out of 7. Has a PE. Okay. So those are some stocks. ASMI, I don't like it because it's no cover call, but it is good for long-term share growth. It's pretty pricey, $5.36 a share, but I always say higher price shares are better than lower price shares. Why? Because high price shares have gone up and up and up and up and made people money and made investors money. Investors are happy. And low price shares, $5, $10, $20, where have they gone? Nowhere. They've gone absolutely nowhere. And no one's made money. That's why high price shares, it's like fine wine. Fine wine costs more. Gold is more expensive than lead. Gold is more expensive than silver. That's why gold costs more. Thank you guys for the likes. Appreciate you. Thanks for coming tonight. I wanted to close out with Tesla. So before I do that, I want to look at some more questions. Appreciate you guys. Hey, Godric, with your questions, so what I can do for you. How to get rich, how to be a millionaire. What do you want to know? Brother, what advice can you give me? I'm the one who should give you advice. Brian Johnson. Dude, Brian, my man, if you're the king of stocks, come up here to your own live. Send me a link. I'll join. I'll hook it up, man. I'll join. I'll just listen. I'll take notes. I'm all over it, man. Do you write cover calls? Do you teach people how to retire into the stock market? I'm trying to teach people to have a financial plan so they're not collecting receipts at Walmart when they're like 70 years old, 75. Trying to get you having to work at McDonald's or Starbucks at 75. I'm down on, and should I sell it? What do you think about AMD? I'm down, should I sell it? Ali Yaffe. What do you think about AMD and should I sell it? Well, the short answer is no. AMD is a great stock. I don't like that they have a female Chinese CEO who is kind of, if you see her presentation, she's kind of, I don't know. You have to look at to see what I mean. But AMD is a semiconductor company or a chip company. Advanced Micro Devices. Advanced Micro Devices Incorporated operates a semiconductor company worldwide. It operates through data center, client, gaming, and embedded segments. The company offers 86 microprocessors and graphics processor units. As an accelerated processing unit, chipsets, data center, and professional GPUs, and embedded processors, and semi-custom system on chip. They try to make it all, fancy. It's just a semiconductor chip company. If you look at AMD, the 5-year chart, which is meaningful. Oh, look. 5 years ago, they were $48. Now they're $140, so they went 100 points in 5 years. Not bad. How do you lose money? Well, you probably got it somewhere around 200. And it's just hit a dip at 140. Okay, AMD will be going up tomorrow, probably. Mark my words. And it's not going to go really below 122. Is like a support. I would not worry. I think it'll be going up. Let me tell you what I like about AMD. Let me share all these check marks, okay? For one, it has a robust share price. 1, check. 2, it has a 5-year chart that's been doing great over 5 years. 2, check. 3, it has, I don't think it has dividend. Let me see. No dividend. So, dividend, no, X. 4, it does have a cover call. I'll show you. Check. 5, it has PE. Price earnings per share. It's making profit. 123. Ooh, that's kind of high. But better to have a PE that's high, which is highly favored, than having no PE at all, which is a loss. So it gets check mark. 6, it has stock splits. It's going to have, I think it has stock splits, pretty sure. AMD, take a look. Has 2 stock splits in 1983 and 2000. So a little slow, but I'm gonna give it the check mark. I have 6 criteria. Let me look at the cover call. All these check marks on AMD. AMD is a great stock. Yes, it's down from 200, but think of it like a buying opportunity. Like, if you're not writing cover calls on AMD every month, why do you have the stock? Let me show you, okay? Buy here for 140, that's 14K, right? A lot of stocks today are 140. 140 is 61, just like CAVA, just like NVIDIA, right? If you just put AMD, NVIDIA, and CAVA all on the list and watch them. Watch how they move. Learn, take notes. All right, AMD, option chain. So spend 14,000, buy 100 shares of AMD tomorrow at the market. Gonna write the cover call. Let's say 145. What do you think? We ready to sell at 145, get 5 points of share growth. 144. I'm gonna say 144. That's 3. 145 is 4. 140.61. Let's do the 145. So you buy the shares at 140.61. You sell the 145 CC cover call, and for that you get paid $395 by 415. Now, the volume is great, NVIDIA and AMD. I would put a limit order of $4. So I'm sure we can get $4. I'll bet you we get $4 limit order. So $4 on this cover call and a 140.61 share price. Let's do the math. $4 divided by 140.61 cents. 2.84% return. 2.84% return. Now, that might not seem like a great return. It's $400 a month on a 14K investment. Really, it's 3 weeks. I mean, if I just show you the final week, December, it's probably a little better, which is a full month. But I want to keep you guys on a month base to keep it simple. 145 is paying 435, so you get 35 more cents. Let's do the math. 4.35 divided by 140.61. That's for 30 days, 31 days, 3.9%. Similar situation, but even at 2.8% or $400 a month, that's a good income. You can pay your car note. You can pay your $400. That's maybe buy you a couple of dinners. Show me 14K, I'll show you $400 a month on AMD. And you're still allowing yourself some share growth to go up. Guy who bought at 200 who has a loss, well, look, you already took a loss, okay? That's already done. You realize your loss, right? What is it? 200 to 140, that's $6,000, a 60-point loss, probably. So I'm giving you 4 points a month. So in 1 year, you're gonna bring in $4,000 on this. Think of it like a little business. Put 14K, get $400 a month in your cover call. Should I do the naked put on NVIDIA? Let's see, from the 27th. Let's do the 27th. If you had a shares at 140, sell the 135 naked put. That's $3. The 140 is $5. So naked put it. So if the stock dumps to 135, that's even a better price. You'll buy it, you'll get a sign. But we're getting $3 for the naked put. $3 divided by 135. 2.2%. Not great, but hey, it's $300 a month. For what? For agreeing to buy the shares at a discount? 5 points less than it is. You're going to that grocery store, you're getting that wine on discount, you're getting paid for it. Whether you're doing the cover call for $400 a month or the naked put for $300 a month, that's income. Think of it like income. Stay on your AMD, get $400 a month, and after what? A year and a half, you're back up to 60 points income. You're back up to $200. That's what I would do. hold on to NVIDIA. Hold on to the AMD. All right. Why don't you like weeklies? Jiggly Huff. Why don't you like weeklies? I find the monthlies are much better. Weeklies, first of all, you got to do 4 trades. You got to show up four every week. I got to show up. I already work. I'm not trying to work. I'm on the golf course. I'm fishing, dude. I'm not like trying to show up to work. 1 day a month on the monthly. Think of that. Like, it's way less work. 2, there's 4 times stuff can go wrong on your weekly cover call. There's 4 chances stuff can go wrong. More mental gymnastics. If your stock gets slammed on the week, you're going to lose share growth. And then you have to write the cover call lower if you want to keep going. And what happens? It goes right back up, and you end up losing share growth. And on the monthly, it's just going to balance out more likely to balance out. That's why I like the monthly better. And also, by the way, your bills only come in once a month. Rent, mortgage, storage, water and power, car note. So you only need to get one paycheck, one fat paycheck a month, right? So that's why I like to do the monthly. It just works out better. Not saying don't do weeklies, but it's just more complicated. It's more difficult. It's like day trading. It's the most difficult. Make it easy for you. I just want to show you Tesla. Like, I circled some cover calls for you on Tesla. December 20, February 21. Okay. And what? Write this down. Tesla, September 2025. That's almost a year. And then January 2027. 781 days. I'm going to show you guys something. I mean, great stock like Tesla. What kind of investments you can get. What kind of return you can get. Again, take a picture. You do the summer cover call, which is 25 days. It has the days right there, 25 days out. The February next year call, 88 days out. Okay. Or the September next year, 290 days out, 98 days out. And then finally 780 days out, 81 days out for the leap, January 2027. So you buy the shares here on Tesla. The point of this, you can go out farther and farther and get more money. More and more money. Like, you get more money the farther you go out. Now, it does take more time, okay? But, like, you don't have to go to work. You just make one trade, and then you don't have to make another trade till the expiration. So, for example, who wouldn't want to spend $33K on Tesla and just get money back right away on a cover call? That's what I'm going to show you. I'm going to show you 4 different cover calls. So you can go out farther and farther. I had a client, a friend, who did a cover call today on Tesla. Well, actually, he bought the shares, missed the cover call. The shares went down, so he's out like $1,000. He's out 10 points, right? So I told him, listen, you can write the cover call next month, and you know we're getting 1,600 on Tesla. I showed you earlier for 3 weeks. We're getting 1,800 for 4 weeks. So you can write the cover call, automatically pay for the $1,000 you're out on the share growth loss. You're going to have a $600 gain on the December 20th. You're going to have an $800 gain on the December 27th cover call. And you can go farther out also, get more money in your pocket. And that money that you get for the cover call, you can pay bills. You can buy shares. You can go shopping. You can go to golf. So who would want to get money up front for an investment and just agree to keep those shares until the expiration? And I'm going to show you. I'm going to look at a couple more questions. I'm going to show you these 4 cover calls on Tesla, then we're going to close out for the night. Thank you guys for coming. Appreciate you. I did ASMI, ASML. Is that a different one? Did I read you wrong? ASML. Holdings, ND. Ooh, 677, a more robust share price. MSO Holding develops products, produces, markets, sells, services, advanced semiconductor. It's all about semiconductors. It has the volume. It's better than ASMi. It has the volume. Has robust share price. Let's look at the cover call. ASML, $677 a share. Now that is a nice share price. That reminds me of Netflix, $800 a share. Netflix was down today, by the way, so be willing to take a down day in all these up days. So if SML is 677, we look at the December 20th, 680, 685. That's 13 points. 690, 20 points. So you can, at 677, you can write to 690. That's $13 higher. 695, $18 higher is $19. Okay, here we go. Here's a sweet spot. Write this down, guys. The perfect cover call to write is a sweet spot where the distance from the share price to the strike price is equal to the premium you're getting. So with ASML Semiconductor, $677 share price, you write to 695. Let me just check the math. 695 minus 677. 18 points. 18 points of share growth potential. And it's paying $19. 19 even? 19 by 1960. So $19 a share, or $1,900. So as you can see, it has double the price of Tesla, but paying the same, barely a little bit more than Tesla. So it's low in the cover call, but it has a cover call. So let's do the math, okay, with me. Clear your calculators. 19 divided by 677 equals 2.8%, which is the same amount of money we're getting for AMD. So ASML, 2.8%, which is 28% a year on 10 cover calls. And if you just look at the 5-year chart, am I gonna be happy? Yes. Has a 5-year chart. 282. And 5 years ago it was 282, and now it's 677, so almost 3 times. 677 divided by 282. 2.4 times. Let's look at stock splits. ASML. Has had 4 stock splits in 97, in 98, in 2000, 2012. These semiconductor companies are just popping out everywhere. Has had 4 stock splits. A 2-for-1, a 2-for-1, a 3-for-1, a 1-for-1. How did you have a 1-for-1 stock split? Anyways, exponential growth on these stock splits. So ASML, I'm going to give it the green light. Even Morningstar gives it 4 stars. Even CFRA gives it 5 stars. Argus says buy. Market Edge says avoid, but Market Edge, we don't listen to them. Redefine says buy. MSCI Holdings says AAA, 10 out of 10. Oh, I'm going to write this down for my own records. ASML. Green light. Check mark. Check marks. All right, guys. Was that the last question? Appreciate you. Do you buy international stocks or just U.S.? Blop. Do you buy international stocks or just U.S.? Okay, so here's my take on that. If you look at the world as a perspective, the U.S. has the money. All the money's coming into the U.S. We have like $55 trillion in our market. The next biggest is China with $13 trillion. Then it goes lower for Europe and Frankfurt. It just goes lower and lower. So we have all the big money in the U.S. We have all the freedom. People trying to come in here by the droves. We have all the business. And I think it's just better to invest in the U.S. Of course, you can diversify. I don't do that. I just pick U.S. stocks. I'm more loyal that way, more patriotic. But also, I think the business practices here are just much more free, and capitalism is just thriving here. That's why we're the greatest GOAT, greatest of all time. So I would just stay with the U.S. because I just think that's where everything's at. If you do invest in other countries, I'll be careful because they don't have, they have like, a lot of times they have more government regulation, they have more chance of like upheavals, like civil wars and stuff. So I'm not saying it won't happen here. It will eventually happen here, eventually. All this woke. But right now, I think we're good. And if you compare with the rest of the market, the U.S. is the rest of the world. The U.S. is the GOAT. Greatest of all time. All right, so thank you guys for coming. I'm going to show you Tesla, then we're going to wrap up. So the point is, I'm showing you monthly cover calls to pay your monthly bills. And you're getting like 3%, 5%, on Rocket Labs 9%, right? Which is a great return. And then multiply that times 10 for the year, right? But you can go farther out. I mean, someone mentioned do weeklies. I don't like doing weeklies. It's too much work. But you can do weeklies and get a little bit more if you want to put in the extra work. But monthly bills come just once a month, so I'm on the monthly. I'm going to teach you that. So now, we did Tesla on December 20th. Okay, it was giving us, was it 5%? This one. Take a picture. Tesla was paying us, I wrote it down here, 4.79% for 3.5 weeks. It's paying us $1,600 for 3 weeks and $1,800 for 4 weeks for the 27th. Write it down. So with 33K investment, that's a great cover call, and you can keep that doing it every month. November, you write December. December, you write January. January, you write February. And what happens is if the stock swings up past your strike price, it'll sell, turn you into cash, and technically it's called an assignment. You get the full premium of the 4% or 5%, or the $1,600 or $1,800, and then your shares will cash out. What you can do, just buy it back right to the next cover call. Or since you don't have the shares, you can sell a naked put. If you get assigned those shares a naked put, then you write the cover call, which is a real strategy. But regardless, it's a successful trade because you got the full premium, plus you got share growth. So instead of 5%, you're probably getting 10%. If you did it at the sweet spot, you're getting double what you're getting on the premium if your shares get assigned and sold. So that's a good thing. Now, February. Let me go to February. Here's December. See, I told you $16 and $3.50, $18 and $14 and $3.55. So that's $1,600 and $1,400. If you agree to sell your shares at $3.55, which is 5 points more, you allow yourself to get $500 more share growth. But you're only losing $200, $180 on the premium, so it's worth it. And then Tesla will go up. Now let's go to February. Write this down. Take a picture. Write this down. And then the puts are on the right. See on the right, those are the puts. On the left, you have the calls. Okay, here's February. Take a picture. Oh, look. It's paying 30 points on the 370. And why do we sell the 370? Because the stock was 340 today. 370 is 30 points higher. So that's a 30-point opportunity on the share growth. That's $3,000. 30-point premium, which is $3,000. So if we bought the Tesla here at 33K, 33.8, 34K, we sell the cover call for February, when the 370 strike, get $3,000 back. So who wouldn't want to invest 33K and get $3,000 back in their pocket to just do whatever, to buy more shares, to spend, to go get some food, to pay our bills? This is a long distance cover call. Let's go farther out. September 2025. Oh look, it's paying $5,600, $55.56 for the 395. Now you're agreeing to sell it for $395, which means if you had the shares at 340, you can get 50 more points, 395. That's 5,000 more dollars on share growth. So you're giving yourself some upside. This is a cover call I want you guys to write. It's called the sweet spot. You're giving yourself more share growth on the upside plus premium that are equal. So in theory, if the shares went up past 400, which it probably will, I mean, just write down 414 on your records because that's the all-time high for Tesla. It breaks 414, it's going to just go higher, probably 500, okay, which probably will happen in Trump's first year, okay. But meanwhile, this is September. Whether it happens or not, you're going to get $5,500 return on your investment. Less than a year. Was that 10 months? And if the shares go past 395, you're going to get 10,000 because you're going to get another 5,000 share growth. Make sense? And then, finally, without further ado, the final trade. Let's do the 2027 cover call for Tesla. And that's paying, hello, these big numbers. Why would somebody, did I circle it? I didn't circle it. Well, we gotta do it now. Why would somebody pay you $8,500? No, $9,000 to sell the shares at $460 if you got them at $340. They're paying you, well, let's do the sweet spot. $340 to $430, that's 90. Let's do the sweet spot. Sweet spot is strike 430 for 2025, 781 days, okay? So you spend 33K, 34K, 100 shares of Tesla tomorrow. We're at the 2027 leap call for the 430 strike, giving yourself another 90 points of share growth potential, getting paid $93.65. Let's just say $9,400. Now that's the $400 back. Let's do the return on that. Do limit order 9,400. 94 divided by 338 equals 27.8%. 28% return for 70 to hold it for 781 days. This is what they're doing. They're giving you a third of your money back for holding Tesla for 781 days, and you still can get another $9,000 in share growth, $9,500 in share growth. So you can actually double that. Probably be times 2. 55% return, more than likely, because it'll probably be past 430 in 2027. Probably be $1,000 by then. But look, you're just sitting there holding it. You're getting the money up front. They're giving it to you up front. You can invest that $9,000. You can buy another. You can buy some Rocket Labs, some IONQs. $9,000 is a $90 stock. Buy a dividend stock, for example, paying you money every quarter. Check it out. Cover calls. I love the trade. It's probably, arguably, the best trade in the stock market. Different ways you can do it. I was showing you guys that. Thank you guys. Appreciate it. Throw me a crane if you want to contribute to gifts. Throw me a sub, and I'll talk to you in DMs. I'll be back probably Friday. Happy Thanksgiving, guys. Remember, don't overcook your turkey. Eat a lot, but don't eat too much. God bless you. Godric out. Person, the new sub, I will DM you.